Motion for debate, the Government's plan to encourage first-time investors in the stock market. Lord Lee of Trafford.
My Lords, it's a privilege to open this short debate on encouraging first-time investors. I've been a private investor for 65 years, investing solely in United Kingdom companies. Through books, articles and platforms, I like to think I've been something of an evangelist for the private investor. I'm also privileged to be the patron of ShareSoc, which is the premier body representing private shareholders. And Lords, we all know the problem. Research by Aberdeen, the old Aberdeen fund manager, has indicated that whereas a third of Americans' personal wealth is in equities and mutual funds, the comparable figure here in the United Kingdom is only 8%. Yet there's no shortage of money here. 22 million people have £120 billion in premium bonds. And research by Barclays, using FCA data, estimates that after contingencies, there is no less than £430 billion in cash held by 13 million individuals. So we have to change the climate and the culture of investing and encourage new investors, break down barriers and be much more creative. The Consumer Duty Act of 2023 made it very unattractive for traditional stockbrokers to take on new clients. So I welcome the Chancellor's determination to move the dial, telling regulatory bodies to deliver, quote, a mindset shift on regulation. Indeed, I have to say that had we been able to buy shares in the regulators, they would have been great growth investments. I have 7 specific suggestions. First of all, dealing with young people. I think it's absolutely ridiculous that grandparents aren't able to take out junior ISAs for their grandchildren. At the present time, they have to be done through their parents, and I believe this restriction should be abolished immediately. I see no merit in it. Secondly, on financial education in schools, which has been and is abysmal. The government still own something like 8% of shares in the NatWest Bank. When the previous government was in power, I and a number of members of your Lordship's House wrote to Jeremy Hunt about the idea of gifting £5,000 worth of NatWest shares owned by the state to willing state secondary schools to be held for the long term. The idea was that this £5,000 would deliver a £350 a year dividend, and the pupils themselves, this is the whole point, the pupils themselves would decide how to spend that dividend. So it would be transformative and would be of modest cost. And for the first time, it would make youngsters aware of what a bank is, what a dividend is, and what the stock market is. There are only approximately 4,000 state secondary schools in the country, so the cost would be a relatively small £20 million. But unfortunately, of course, the general election intervened. But Rachel Reeves could still deliver this because the government still has got 8% of NatWest, as I previously indicated. Now, parallel to this, I'd like to suggest and encourage regional public companies to gift shares or cash to their local schools, schools from which they will recruit, schools perhaps where their employees' children go to school, to enable those schools to become shareholders in those local companies, thus building bridges and raising awareness. So far, I've only discussed it with one public company, Flavours and Fragrances Treat, who are based in Bury St Edmunds, where I'm a shareholder. They give something like £100,000 a year to charities, and they're possibly considering this approach and applaud the concept. And they're happy to be quoted on this. So I hope that the Quoted Companies Alliance, the trade body for smaller regional public companies, will actually support and promote this idea and take it forward. Next, I come to television. there's been a near failure of television, a total failure of television over the years to cover the stock market or investment opportunities. And we've got so many exciting UK companies to invest in. On television, we have any number of gambling advertisements and advertisements for medallions of dubious value, but virtually nothing on the stock market. I think television producers and similar are fearful of the regulations. So I urge the government to call in television and media chiefs and challenge them to deliver programmes to encourage private investors and in the nicest way to tell the regulators to back off. Fifthly, we should aim to encourage and increase employee share ownership. Here the government should, I believe, take up the sensible and positive recommendations of ProShare. And also, I would suggest, encourage companies to disclose the level of employee share ownership in their annual reports. Sixthly, parallel to notifying premium bond prize winners that currently they've won a prize and they have the choice at the moment of taking cash or buying more bonds unless they have the maximum number, I'm suggesting that we could and should inform them of the possible routes to stock market investment, to give information on possible investment platforms and things like ISAs. And finally, I come to ISAs themselves, which have been such a wonderful tax-free wrapper over the years. They've been a huge success, and I'm certainly a grateful beneficiary. However, and I know this will be controversial, I would suggest that all future ISAs should be restricted to only UK-quoted shares. If people want to invest overseas, that is absolutely fine, but why should we give them tax relief to enable them to do so? To be clear, I'm not suggesting that existing ISA holders should have to divest their overseas holdings. That would be retrospectively unfair and administratively messy. And perhaps also it's time to look at cash ISAs. Is there a case for making them perhaps less attractive, taxation-wise, than stocks and shares ISAs? My Lords, these are very much personal ideas of mine, and I repeat, I'm sure some of them are controversial. And so I very much look forward to hearing contributions from other colleagues in the short debate this evening on boosting share ownership. Now, in the nicest way, I don't expect the Minister to be able to answer in detail a number of these specific points, but she is a Leeds lass. She is a very respected former Leeds City Council leader, and therefore will certainly know the Chancellor personally, who of course is a Leeds Member of Parliament. So all I would ask of her is that she endeavours to draw the attention of the Chancellor to these suggestions that I'm making and that other colleagues will be making during this debate. I think it'd be very disappointing if our ideas were lost in a Treasury in-tray, or even worse, perhaps in the Treasury waste paper basket.
I very much